Hello everyone and welcome back to Crypto Atlas. In today's video, we're going to discuss Bitcoin, what happened to it, why did it drop so much, what is the leading indicators behind this. We're also going to take a look at Celo, aka CGLD or CGLD, and its price went up quite a bit, and I found a very short little article that kind of indicates maybe the good news that was related to that, but I also have my own thoughts on that. We're also going to discuss a couple other things going on with Bitcoin. We'll also look at Ethereum on the charts and Orchid, as well as very briefly with XRP through the Kraken side. And if you guys are new to the channel, don't forget to hit subscribe, hit the thumbs up like button. Let's try to get to 50 likes on this video at least. And also click the bell icon so you can stay up to date for all the latest cryptocurrency news and technical analysis. First up, let's go ahead and talk about what happened to Bitcoin right off the bat. Let's get into that. So there's an article that came out over here. Cointelegraph had reported that there was supposedly a double spend that was spotted, which is, not a good thing if it actually took place, because now you're talking about double transactions with Bitcoin, which is not supposed to happen. BitMEX research has identified what it believes to be a double spent Bitcoin transaction worth $21. That's it, $21. BitMEX research has identified a suspected double spend transaction valued at 0.00062063 Bitcoin, or roughly $21. And it doesn't appear to be an instance of that popular replaced by fee wallet hack, right? Now, Twitter user and BSV, so we're not talking about BTC, we're talking about the Bitcoin Satoshi Vision, which is a whole separate group led by Craig Wright, who, in my personal opinion, is not Satoshi Nakamoto, no matter how much he keeps claiming it. And now there's recent things of him trying to claim the white paper on top of all the original keys. And every time he goes to court, he basically gets laughed at, and the court judge even responds back, looking at it with statements in the documents that it's all ridiculous, that it's been validated through the hash rates, that it's not capable of what he's been claiming from back then, and just a whole bunch of slew of things that the truth didn't line up. There was another transaction that had occurred that was supposedly from one of those wallets that Craig Wright was the ownership of, since he claimed that he was Satoshi Nakamoto, and that wallet address was one of those addresses. Well, guess what? A transfer had occurred last year, and they added a little memo to it saying that Craig Wright is not Satoshi Nakamoto. So it's kind of weird if you're Satoshi Nakamoto and this is your wallet address, yet somebody else has access to that specific reference that you're claiming as part of your proof, right? You're trying to prove it's evidence, but you're trying to make it proof. So it's very weak evidence at this point. Just ridiculous, the whole thing. Anyways, Twitter user and BSV Australian advocate Eli Afram noted the mixed messages from BitMEX research, asserting the double spent transaction should be cause for concern despite its small value. So it appears an actual double spend has occurred on BTC, not an RBF replaced by fee, but an actual double spend, a mere 22 USD, but this could have been 22 million. We're going to go into that. But yeah, don't listen to this person who's actually trying to boost BSV and claiming that it's the true Bitcoin. In actuality, BSV, for those of you guys that don't know, is a fork of not Bitcoin, but of Bitcoin Cash. All right? Think about that for a second. It's supposed to be the true Bitcoin, yet there's no proof. Everything's getting disproven. Just ridiculous. Moving on. Well, actually, we're going to go ahead and just tie right into that. So Andre M. Antonopoulos has actually posted this thread on Twitter. I'm going to go ahead and read this through for you guys just to clear up the air about that last little bit. A more detailed explanation of the whole. A double spend broke Bitcoin. FUD, or fear, uncertainty, and doubt, that was circulated by an irresponsible publication. There was a chain reorganization in the Bitcoin blockchain. This is a common occurrence that is part of Bitcoin's normal operation. It is a result of decentralized consensus under proof of work. All proof of work chains do this. two blocks were mined almost simultaneously, competing for the same height, meaning that they had the same parent block and were trying to extend the chain of the same block. Only one can ever succeed in the long run. It is possible that different nodes and miners see one or the other block first and assume it is the winner. This is also normal in a decentralized consensus algorithm. Eventually, within an average of 10 minutes, another block is mined. This new block has as its parent one of the two competing blocks. Which one? Whichever one the miner saw first and assumed to be the winner. The new block extends the chain, resolving the issue of the two originally competing blocks. One is now a parent and the other is the last descendant of a shorter chain. The chain with the greatest cumulative difficulty is selected by all. The orphans are descendants from the other chain because it is discarded. Again, all of this is normal. A one block reorganization happens every couple of weeks on average as a consequence of decentralized proof of work. A two block reorganization happens less often, maybe a few times a year. A three block reorganization is extremely rare. I don't think we've ever seen one. What happens to any transactions in the discarded block? If they're also in the winning block, then all is well. If they are not in the winning block, each node puts them back into its mempool as unconfirmed and they wait for another opportunity. During a reorganization, there is a chance for someone to attempt a, quote, double spend. This is not a double spend from the perspective of the blockchain as a whole. Only one spend survives. Therefore, no double spends happen. That's the whole point of proof of work consensus. But from the perspective of the recipient of a payment, they may see a transaction that appears to have one confirmation. It is in a block, then disappears when that block is discarded. Very rarely, the sender will sneak a different transaction in the competing winning block. Let's say this is a payment for a lesser amount, more change back, or to a different address. Because the original transaction is gone, discarded block, the new transaction, winning block, is the only real transaction. The blockchain has prevented a double spend by discarding one and only recording the other. From the perspective of the recipient, they thought they were paid after one block. Then they weren't. This is why confirmations provide probabilistic immutability. The chance of a reorg drops with each subsequent confirmation. This is described in the Satoshi white paper on page 8. In fact, it's the only math equation in the paper, and it describes the declining probability of a reorg, showing why 6 confirmations, though arbitrarily chosen, is a good basis to consider a transaction finalized. Here's page 8. As you can see, the chance of a block getting discarded from a reorg declines exponentially as more blocks are added to the chain. Finality is based on probability. So when do you consider a transaction finalized, and when is it safe to give your customer the TV or the fiat or whatever value you're exchanging? It depends on the amount. I waited 3 confirmations after selling my car for $11,000. IIRC was enough for me. It also depends on the risk of the buyer going away. I'd sell a house on 0 confirmations because I know where they live. They can't run away with it. Some things are more dangerous. I'd wait 6 confirmations to exchange for cryptocurrency because once I give it, I can't get it back. During this most recent reorg, a transaction of $22 was in both competing blocks as 2 competing transactions. We don't know why, we don't know who, but there's nothing impossible about this. It is part of the protocol. Now, for $22, many would accept 1 confirmation. Worst case, you're out $22 of something you gave in return that was delivered instantly and irreversibly. Not a big deal. Many credit card vendors don't take a signature for amounts under $25 for the same reason. While it can be disputed without a signature, it's not worth the extra time and delay to get one for such an amount. Same risk model here. In fact, we do not know that the recipient of that payment lost money. They may have been waiting for 2 confirmations and not delivered the other part of the value. So in that case, they lost nothing. They consider this unpaid because it didn't get 2+ confirmations. Someone article quoted the lie, it could have been 22 million. Well, no, it couldn't. If you accept a $22 million payment on Bitcoin, I would assume you understand how Bitcoin has worked since 2008, exactly as specified in the paper. You don't deliver on that payment after one confirmation. Several other incorrect statements are also made in that and other articles about RBF and SegWit. Here's the truth. This is a normal function of any proof-of-work blockchain. A reorg with two different versions of a transaction can occur in every other proof-of-work chain. Nothing weird or outside the consensus algorithm happened. Bitcoin continues to work exactly as it should. The only thing that happened is bad journalism. If it can even be called that in a bubbly market, a rumor can circle the globe before it is debunked. Consider it debunked. Right? So really well put. Hopefully that reassures you guys that everything is fine and what happened was normal. If you want to check me out on Twitter, by the way, my name is in the bottom left-hand side right here at Atlas Official TV. So be sure to check me out over there. Absolutely awesome that he went into such detail to go ahead and explain this for everyone. I went ahead and dropped a like. I did on the first one. I mean, I guess I could technically go through every single one, but I retweeted it, liked it. I think it's important that this news gets out there because it's causing a lot of FUD and the price has dropped exponentially. All right, now that out of the side, off to the side, let's go ahead and continue on and get into the actual technical analysis. I'm going to try and keep my videos shorter than what I used to do. Biden administration reported to be lining up a former Ripple advisor as the next bank regulator. Michael Barr, the former member of Ripple's board of advisors, Ripple, the company that's with XRP, which is currently going through the court litigation, is set to become the United States' next banking regulator, according to a report. A former Assistant Treasury Secretary, Barr will become the second individual with crypto connections to lead the Office of Currency Comptroller, or OCC. The recently departed Currency Comptroller, Brian Brooks, is a former Coinbase executive. Very interesting. Next up, the drop that has happened with Bitcoin has continued even as important financial players warm up to cryptocurrencies. BlackRock, the world's largest asset manager, for instance, is allowing two of its funds to invest in Bitcoin futures, according to prospectuses filed on Wednesday with the Securities and Exchange Commission. And Sequoia, a Virginia software and engineering firm, is giving employees the option to be paid in Bitcoin. This could create tax headaches for employees who actually want to spend their paychecks, given that after already paying income taxes, they would have to pay more taxes based on any changes in Bitcoin's value. Excuse me. Now up for Celo, or Celo, however you say it. I think it's pronounced Cello, aka the Sea Gold, and why its price may have gone up exponentially recently with this news. So Celo, a decentralized financial app, is adding a new stablecoin backed by the euro. The euro stablecoin will be backed by a basket of cryptocurrencies that are algorithmically adjusted to maintain a stable price. The team has been working on the euro-pegged stablecoin for a few months since launching the Celo dollar in June 2020. The stablecoin is a mobile-friendly innovation aiming to give the 5+ million smartphone users a safe, secure, and instant channel to transact cryptocurrencies worldwide. Unlike Tether, who claims to back each stablecoin with $1 its reserves, the Celo Euro stablecoin, in a similar fashion with the Celo dollar, will be backed by a basket of cryptocurrencies, including Bitcoin and Ethereum. The cryptocurrencies will be algorithmically adjusted to ensure the stablecoin is pegged to €1 at all times. Olszewski said in a statement, he added, "We did a lot of work to show that having a diverse set of crypto assets is actually really good for stability." So possibly that could be a contributing factor towards Sea Gold, but that's the only news that I could personally find. If you guys know of anything else, let us know in the comments down below. We're going to go into the charts now. Once again, though, if you guys are new, don't forget to hit subscribe. And more than anything, make sure you click that bell icon. It's so common for people to subscribe to a channel, but then guess what? YouTube stops recommending the content to you, and you don't even remember anything that goes on here because you don't have the secondary notification system that they rolled out years ago. So hey, make sure you hit subscribe, make sure you hit the thumbs up, like button. Let's try to get to 50 likes, and also click the bell icon. And then going into the charts now here, yesterday was an exponential drop. I mean, this thing was just massive. If we actually take a look a little bit more into the details on this, let's go on the Fibonacci retracement at this point in time and see how everything is beginning to line up there. All right. Go ahead and pull this down a bit more so we can get ourselves lined up, I'd say more accurately with where a lot of this action has actually taken place. So I'm just going to go ahead and draw that out a little bit more like that for you guys. There we go. Okay, so it broke through yesterday the 0.618 on the Fibonacci retracement and essentially bounced right off of the 0.5. So interestingly, as I'm pulling up the Fibonacci sequence for you guys, you can actually see in real time, well, I mean, this video is now recorded, but you can see as I'm putting it up that it did bounce right off of that level, and it went down about halfway on the next level back down to the 0.382, getting back towards trying to reach its base level before this whole actual major run started to take off. So we have pushed all the way up to new highs at $42,000 for the year. It's down below $30,000 as of the moment, more than likely because of the news that we had and also the combination with the fact that it did drop below the 21 EMA, which is typically a sign suggesting a bearish pattern or a bearish time period. We've been in a bullish pattern for quite a while now. I mean, we've been bullish every single day ever since back on December 12th. So over a full month of just being all green. Well, I mean, not all green. You have some red candles there, but in the positive bull market cycle. So suggesting a little bit of a cool down period with what's going on. A good opportunity to buy, in my own personal opinion. I'm not a financial advisor. I can't tell you guys what to do, but if you've been looking for a dip, and you want it to go even lower than this, wait, what did I just do? Then you're asking for something that's kind of like a rare chance of it actually happening. So basically, it dropped almost 16% from its highest position to its lowest position on yesterday's candle. Quite a substantial drop. Now, if we take it into account for today so far, which is now 6 p.m. Pacific Standard Time, my time, we've dropped down almost 7%, but have already climbed back up, now only being down approximately about a little less than 3%. And it's still working its way back up, back above $30,000 once again. This could be a fake out. It could end up having a further drop as people start to think like, oh, hey, this is the bottom, right? You start to get in on the bottom and then they start dropping you harder. And all the people that are doing longs at this point in time, they could end up getting wrecked too. But more than likely, a lot of people have been putting in short positions during this point in time. And either they're canceling their shorts and taking their profits at this point, because it was a very substantial amount for them to be able to gain for the day, or they're about to get wrecked as this climbs up and they're going to get liquidated, which would actually shoot the price up even faster. So I would expect some high level volatility in the next 24 hours to happen. We'll have to wait and see what goes on. Hopefully there's no more crazy news that's going on in regards to Bitcoin and, false information that's being thrown out there, which is what seems to be going on. Like the other day, they said that the one lady, she said that Bitcoin's mostly used and cryptocurrencies are mostly used for illegal activities, which is false. There's a very, very, very small amount of people that actually use crypto for illegal things. Most of the transactions are all legal. So that was just a ridiculous statement. But you're layering these things, and then that's what the average person's hearing. That's what the institutions are hearing. And, then you get effects like this that goes on. So it's unfortunate, but it is what it is. Dropped below our level of support here. Crashed below the 21 EMA. Went down below our level of support. Through the Fibonacci sequences. And as I mentioned, bounced off of that 0.5 yesterday. Went down about halfway on the 0.382. I would be looking at the next major zone at the next Fibonacci level, right here at $27,000. So if it decides that it wants to drop down significantly yet again, which as of the moment, it is gaining in price. A lot of price good buys are going in on the order books right now. It's starting to fly up pretty high. Look at that. It already just went up $60 in like the 10 seconds that I was talking about. But if it goes down, then we'd be looking right around $27,000. I would say as a strong level of support, that would actually put it at a percentage drop during the day down about 12.5%, which would, again, be quite substantial, especially given how much it took place from yesterday. So the bottom may have already hit for the daily candle, and this is going to be looking to recover. If it's looking to recover, it needs to get above $30,000 first, which it already has. And then next level I would say is the $32,000 range, pushing back above 33,000, and then getting above that 21 EMA is going to be crucial around 34,000. And then if it can break above 34,600, it's going to get back into this consolidated space, which we have the symmetrical triangle pattern that's been going on. And guess what? It had to make a decision here within the next couple of days. And this is suggesting that this is the direction that it was likely to go. But it's only 1 day of closure, which can technically be a fake out. We could end up climbing all the way back in here again and then waiting another couple of days, waiting to see what it's going to do once more. The only big concern for it to do that is that technically we have a daily closure. So if it came all the way back into the symmetrical triangle pattern to the January 24th end period, this whole bottom line of support is actually being shifted now quite considerably, given the fact that we just had this big candle position take place. And I would actually be looking at it a little, let's see, wondering if I want to work off of that wick. Yeah, we're actually going to work off of that wick right there. So I'm actually going to reposition this right now. So it's broadened itself out a little bit more, which could actually have a further extension, potential time that it's going to take before they actually have that crossover moment, and just try to get these lined up a little bit more cleanly for you guys. I'd be looking right around time period. Yeah, that's actually looking pretty good right about there. We're getting a couple different points of reference. That would be around February 2nd that this could end up having an extension period of time. We'll have to wait and see how that goes. But, you know, it's very, very interesting day. Next cryptocurrency. Oh, and by the way, so the odds are actually higher right now that it's still going to be in the red, just so you guys know, because it is below that 21 EMA especially. Looking at Ethereum, massive drop from yesterday, hitting from about 1,391 all the way down below the 21 EMA, down below 1,080, well, hitting right around 1,080. And then on the green position, starting to show signs of recovery. On the daily candle is still held above $1,000. So right now, the next level it needs to go is 1,230. Next level after that is 1,282. And then a high level back above 1,420. And then we got 1,440, which is the all-time high, which was established this year. $836. Actually, sorry, $1,000. And then we got 908 as a bottom, and then another level 834 respectively. And concern is that if this decides it wants to climb back up and it lingers for a little bit right around the 1,286 instead of just full on blowing out and going above and beyond it, then we would actually be looking at a formation of a head and shoulders style pattern. And by doing so with this is actually suggesting there's a likelihood of us having a further decline down, which would not be good. So if it decides it goes up and it wants to linger here, that's concerning. But if it decides it wants to keep climbing through and it passes this previous moment, then that would invalidate a head and shoulders pattern for this position. All right. Next one. Let's go look at what am I doing right now? Let's go look at CGLD. So this is still bullish for the day. Yesterday had a massive green candle. This was like one of the few ones out of all crypto that was in the red that decided it was wanting to move up and do well. So that's the only news article that I could find on it. As you guys can see, it's holding its position pretty strong. Add potential for a huge sell-off given the fact everything that just happened with the crypto and people taking their profits. You can see that there was a considerable amount off of that top that came down, not quite as substantial as what happened on January 5th. January 5th, that was like a massive pump and dump situation occurring within that same day right there. I mean, that was more than 50% of its retracement off of its high. So a lot of buying pressure going in and then a huge amount of selling going off of that. Just looking at it very briefly on the Fibonacci retracement. Where we're at right now is above the 0.618, pushed through earlier in the day briefly to the 0.786. Right now I'd be looking at resistance right there around $3.67. If it can close out the daily candle above that, then we have potential to climb up the next day up to $4.27 once again. Decides that it wants to climb down, I'd be keeping an eye on $3.18, another level down at $2.83, $2.51, and the 21 EMA at $2.25 respectively. Okay, now let's go look at what's going on with Orchid. very briefly. We're going to look at XRP very briefly as well. Super brief with these ones, actually. So Orchid had an exponential drop that dropped down below the 21 EMA, suggesting that it might be going into another bearish pattern. It's below 30 cents once again, actually getting close around the 25 cents. In fact, earlier in the day, today, it technically was in 25-cent range, now in 26-cent range. It effectively had bounced off of this level of support here, right around that range of 25 cents. So this is actually holding up pretty well, just slightly adjusting it there. It lines up a little bit better with that candle position, which actually shows that it did bounce off of that one as well. So right now, looking at 25 cents or 0.2516 is a major level of support. Further level down below that will be 22 cents or 0.2241. And another level down below that would be at 20 cents, almost 21 cents. Climbing back up, let's get above 27 cents, get above 30 cents, breaking above 33 cents. And then we're back on the road trying to get towards mainly 35 cents. It's really difficult trying to get above that level. And XRP, we're going to look at it from the Kraken side because it's not on Coinbase anymore. And lo and behold, the last 2 days, guess what? It has had a bit of a drop going on. Even still in the new daily position, it is still red. Had some buying pressure that came back up on it. At a low point, went down to 24 cents. And if it decides that it wants to go further, I would really be looking at a level right now. It's so weird because I don't have my stuff labeled anymore since it doesn't give you the chart for Coinbase. Like everything's literally just gone on it, like it didn't even exist. So I'd be looking at a level right around 21 cents as a key position, and then a further level position line up right here. We got several key points that is at 17 cents. And then a further level drop. Very big bottom position right there, looking right around 11.5 cents. Okay. And if it wants to go back up, you're looking at 29 cents. If it can break above that, you got 30 cents and then starting to go back to these previous highs. I'm going to wrap up my video there. If you guys are new to the channel, once again, don't forget to hit subscribe, hit the thumbs up like button. Let's try to get to 50 likes on this video. Also click the bell icon so you can stay up to date for all the latest cryptocurrency news, technical analysis. Drop a comment down below. Tell me what you thought about everything today. If there's anything that I missed out on and you think it's important, be sure to tell us. You can also just say hello to me in the comments. Thank you guys so much for being here, and I will see you guys in the next episode.